Joshua Mahony is Chief Market Analyst at Scope Markets Financial Services, and he joins us now from London. Great to see you again, Joshua. Now, look, most battery EV-only makers are loss-making at the moment, but BYD is in the fast lane.
Yes, and I mean, that's their strong point, really. I mean, we've seen in China in particular an incredible period of time in terms of the price war that we're seeing for EV makers. Tesla have been suffering because of that and continuously having to slash prices. BYD appear to be experts in this matter. They keep cutting prices, they keep putting the pressure on their competitors, but we're seeing them with real rapid growth in terms of the bottom line, and we're seeing it once again here in terms of 18.6% rise in profits. That is the slowest quarterly rate since the beginning of 2022, but it's certainly no mean feat, and the company is really only just gearing up as we see them potentially pushing forward in terms of a possible expansion towards Europe and towards the North America region.
So it's not really about profits, is it? It's about market share.
Yes and no. I mean, we've certainly seen in the past with Tesla, it was about being able to sort of build the size and then ultimately profits come down the line. But if you can have a company that manages to massively ramp up production and sales and volumes while managing to remain profitable, then of course it means they don't necessarily have to take on as much debt going forward. Of course, debt is relatively expensive right now. And it certainly does encourage investors to feel like they're not necessarily just buying into a loss-making company on the idea that they will turn profitable. Instead, they've got massive growth and they're managing to turn profitability while staying competitive and driving down prices. So really, it feels like this company is in a particularly sweet spot at the moment.
A sweet spot for BYD and its shareholders, not necessarily for other car makers around the world. I mean, the UK's Trade Secretary, Mark Harper, recently threatened robust trade sanctions to prevent low-cost models from China flooding Europe. It's too late for that, though, isn't it?
Well, look, this is something that ultimately you have to compete on a global scale. And, you know, we've seen a similar kind of thing with the US and the massive 25% tax that they have on EVs coming from China. But the likes of BYD are essentially just planning to create factories in Mexico. That would mean that it's created in NAFTA, gets shipped up into the US, and therefore they get past those tariffs. Something similar could happen in Europe, and bear in mind, certainly when it comes to the UK, we don't necessarily want a trade war like perhaps Donald Trump doesn't mind it, because the UK is somewhat smaller. So I don't necessarily think that we will be as robust with our actions. And bear in mind, at the moment, Chinese EVs have a 10% tariff of coming into Europe, but European cars have 15% tariff going into China. So by and large, there's already significant taxes for these companies, and it's questionable how much the UK would really want to do, because it wants to also maintain a strong relationship with China.
But in terms of where the European automakers are, the ones who have really been going big on EVs, you know, are they stuck in the slow lane, or do you think there's a chance to really get back in the race?
Well, it's an interesting one, because certainly if you looked maybe a few years back, the idea that people would be driving around in Chinese cars maybe would have been laughed at, because we're so used to these same names within the automotive industry. But with electric vehicles comes a willingness to try something different. And certainly I feel like the German and European car makers have been somewhat slow to really compete in this area. Bear in mind, China, of course, has had much lower inflation than the likes of Europe, and therefore European wages have elevated. So the ability to really compete on price is very difficult for European car makers. So yeah, so far it hasn't looked necessarily great for the Europeans when it comes to EVs. You know, the US have done all right, but China really have been powering forward, and BYD is at the forefront of that.
And it's not just about the vehicles itself and the technology, it's the technology that goes inside them, isn't it? And China has a real hold on the critical minerals that you need. Where is Europe and where's the UK in terms of that?
Well, yeah, and ultimately the Chinese have been moving ahead of this, in terms of rare earths and the like, way ahead of the likes of the US and Europe, and those decisions in terms of securing strategic minerals and resources have always felt like they're a little bit slower when it comes to the likes of Europe. So that's just another thing to consider. Certainly, as things stand, it doesn't necessarily seem like it's a massive roadblock, and there is a possibility that European car makers could also set up in China, and that might get them around some of these hurdles. But certainly, I would say that BYD looks much better prepared to push forward in the coming years compared to maybe some of its bigger names, but mainland European competitors.
Joshua Mahony, always a pleasure to talk to you. Thank you.